Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks. The stock movers today. I'm Tom Keene with Paul Sweeney and Bloomberg's Lisa Mateo. Did I do okay there?
That was excellent.
Thank you.
I love it. Okay, we are retail focused today. All right, we have to start with Target. Their shares have been down as much as 3%. The basic, it cut its sales forecast, weaker than expected quarter. So the company pointed to a few things, right? There's people spending less on things like clothing, home goods, discretionary items, falling consumer confidence. There's uncertainty over tariffs, right? Shoppers, they also boycotted because they had that decision when they stopped those diversity initiatives. So people didn't like that. Comparable sales, they dropped 3.8%.
They called that out, the company?
They did, yes.
Really?
The company
Wow.
did. They said people are boycotting. Slower shopper traffic. And the thing is, consumers, what they're doing too, they're spending less per visit. So that's another thing they pointed out.
I didn't hear this at Home Depot, did I?
No, the difference, there is a slight difference, especially when it comes to price increases and things like that. Because remember, we've had Walmart talking about we're going to raise prices because of tariffs. But Home Depot said, no, we're not.
Come on,
Target saying no.
Their head of government affairs goes, that didn't work for Walmart. Change it to them.
Yes,
who knows what they're going to do?
Well, when your CEO, like the CEO of Target, is saying, you know what, we're not happy with the results, that's a red flag. They did have one bright spot though, that was e-commerce. They did say that was doing well, but they're just, I mean, they've been struggling.
Self-inflicted. 6 months ago, everything was just hunky-dory. I don't know.
Agree.
So there you go.
Next.
All right.
I mean, the big part is that so much makes up of their sales. 65% is like those consumable goods, whereas you have Walmart who has the groceries. Yeah. But Target, that's not a big thing for them. Okay, TJX, we'll stick with retail. That's apparent. TJ Maxx, Marshall's, Home Goods. Shares up and down as much as 2%. So it topped first quarter earnings and revenue expectations. But the thing is that they warned that higher tariffs could lead to softer than expected second quarter earnings. So it was kind of that look ahead that investors didn't like, so that's why their shares are lower. But they're known as like the discount retailer.
I mean, you and Alex are all over TJX.
Because they have the name brands, but they're still struggling. So it just goes to show you, but who's not struggling? Yes, Lowe's. That would be, yeah. So Lowe,
there's like 8 Lowe's. Which Lowe's is this?
This is the home improvement Lowe's.
Home Depot Lowe's.
Yes, Home Depot. Okay, you could say Home Depot Lowe's. Yes, their shares have been higher, about 3% before the bell. So they maintain the outlook, even though sales fell last quarter, but it fell less than expected. So you time that right into the Home Depot earnings. So it looks like consumers still spending on their homes, things like that, home improvement. They're putting off the big projects though due to high interest rates, but they're keeping these smaller projects. So a lot of the smaller projects are what's really helping the stores right now. It's been doing things to improve. They focus on boosting offerings for professional contractors. Like they're trying things like that. They're trying to handle larger projects, investing across the online business. The interesting thing is that the home category is usually vulnerable to tariffs because a lot of the products are sourced from overseas. They also tend to be discretionary on top of that. But Lowe shares have been higher before the bell. And the last I want to point out to, because we've been talking about it over the past couple of days, is UnitedHealth, right? It's on this roller coaster ride. The shares are up, down, up and down, up and down. Before the bell, it's got back on the downside. It's falling as much as 6% this morning. The reason why, well, the latest thing is this report from The Guardian says that the company is secretly paying nursing homes to reduce hospital transfers for its residents. So you said it. It's just been a mess. And that's the issue. So this morning, their shares are low.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.